All right, we'll give people just a minute to come in before we get everything started. All right, welcome everybody. We're super excited to be hosting today's Power Hour in our Build Your Business Power Hour series this month. Today's Power Hour is presented by Sovos. We'll be talking about how retailers can prioritize growth with the right sales tax technology. I'm very excited to welcome our speakers today. They are the experts. Be sure to take full advantage of this session. Use the Q&A in the chat box down below to have your burning questions answered. And with that, I am going to pass it over to Tim Roden, who is the Solutions Principal at Sovos. Tim, take it away.
Thanks, Megan, and thank you. Appreciate you having us present here. Let me share as I'm chatting. But my name is Tim Roden. I am a Solution Principal with the Sales Tax line of business here at Sovos. I've been with Sovos for over 7 years now. All that time has really been spent working with organizations and trying to help them solve solutions that pop up with sales tax. So as we go through this, we'll talk about some watch out areas that you will encounter as you continue to grow and that you need to make sure that you account for so that you can grow, and also talk about how technology can help you mitigate any of those challenges. So really looking forward to this discussion. And as we go through this questions, feel free to pop them in. And I'm also really excited to be presenting with Kasheen, who is an expert at helping solving problems for clients with her firm Ledger Gurus. Kasheen, you want to give yourself an introduction?
Yeah, of course. Hi, I'm so excited to be here with everybody. My name is Kasheen, and I am the sales tax lead at Ledger Gurus. We started having a sales tax team about 3 years ago after the Wayfair decision, because that's when a lot of the e-commerce clients of ours started having really a need to be compliant with sales tax, and we wanted to help our clients with that. So now we have lots of clients that we're helping them with sales tax, and I have lots of examples on what to do and what not to do when you are starting your business and when you want to be compliant with sales tax. So excited to share all that with you today.
Awesome. Thanks, Kasheen. So let's get going here. So we're going to talk a little bit about, you as business leaders, growing your business is one of your main goals, right? So we're going to talk about growth and how that could potentially impact sales tax compliance. So we'll get into a little bit of those areas. Then Kasheen's going to kind of lead us through some vendor selection criteria, right? So understanding that you've got challenges that are caused by your business being successful and growing and reaching more customers. You need a solution. What are some things to look out for and to consider as you're making that vendor selection? And we'll kind of wrap up with overall benefits of sales tax automation, what you as a business can get out of working with technology. And we'll talk about some specific client examples from folks who we've worked with and some of the benefits that they've been able to realize. So that's what we're going to talk through for the next 45 minutes or so, and we'll leave some time for questions. But the two of us can get long-winded on sales tax because it's really a fascinating topic. So we'll try and stay on track. So we'll talk a little bit about forms of growth. Kasheen just mentioned Wayfair, and this is something that you may or may not be familiar with, but it is probably the reason that you're on this call. Back in 2018, the Supreme Court ruled on the Wayfair versus South Dakota case, which was really about determining or figuring out who it was had could make the determination as to whether or not to register to collect and remit sales tax in a specific jurisdiction. It used to be the law of the land was all based on physical presence. But in 2018, the Supreme Court passed a ruling that said each state can determine the requirements, and pretty much every single state has thrown out that physical presence requirement and said, if you do business in our state, and most of them are a threshold of about $100,000, if you do business in our state, then you have the obligation to register with our state, and therefore you need to collect and remit sales tax. And prior to that, I would experience this as a consumer, and you would buy something from an online retailer, And if they didn't have presence in Massachusetts, then I didn't have to pay the 6.25% tax on that. That's pretty much out the window now. So that's one of the main ways in which we have seen growth, as businesses grow and you start to reach a different presence in different geographies. Now you got to worry about, are you approaching that threshold? Do you have to register in that specific jurisdiction? And once you do that, it opens up a whole can of worms, right? Now you've got to figure out what are the appropriate rates in those jurisdictions. If you're a Massachusetts-based seller, now you got to figure out what the sales tax is in Minnesota. And then it also impacts the products and services that you're selling, because not every product and service is going to be taxed in the same way. So you've got to make sure that you figure out all that information. So Kasheen, from a geographic growth and Wayfair impact, are there other challenges that you've seen your clients run into?
Yeah, besides going into different states, because now it's not your decision as a company on where to grow, it's all based on your customers, and they determine where you have a sales tax liability. We've also seen our clients grow internationally as well, and then those complications add to their business model that they have to worry about, like the Canadian version of sales tax. So that would just be one other thing I add on. But pretty much the most popular pattern that we've seen is people, like businesses, going from fighting in their home state, just where they are headquartered in, where they have physical presence either through people or property in that state, to now having to file in multiple states. Some of our clients went from one state to like 20 plus, 30 plus states where they have to worry about. And this is where they really need a solution. They can't manage this manually.
Yeah, I think the international component's an interesting one too. We've started working with clients who not only sell within North America, but also potentially sell in Europe. And Europe just introduced some legislation in July that changes the way in which, even if you have no European presence, if you are selling into Europe, either you or the marketplace you're selling on has the obligation to collect and remit tax. So it's all the government jurisdictions, they want to make sure that they are getting the tax revenue that's owed to them. So they're looking for ways to make sure they can capture that. The other piece I'll add on here in terms of growth, right? And as you as organizations are experiencing growth, which is exciting, right? You want to expand your business, you want to grow. There's a couple different areas. One is how you actually reach your client base. You may have started as a brick and mortar, and now you're expanding to e-commerce. You've got multiple channels, right? How does that impact your ability to collect sales tax? And that's the Wayfair impact we talked about. The other is potentially, as you grow, maybe you're able to acquire other organizations or acquire different divisions of an organization to help expand your business through M&A activity. Right?
Or be acquired by another organization.
Right. And I think, Kasheen, you had an interesting, when we chatted before, you kind of had an interesting perspective on some of your clients who were maybe looking to be acquired and how that is impacted, their desire to be compliant.
Yeah, so a few of our clients are under due diligence process right now, where they're being looked at by a buyer, because lots of people actually, there's so much money floating around the market these days. They want to buy successful e-commerce businesses, but in the due diligence process, before they can be acquired, sales tax is something they want to look at carefully to make sure if there's any outstanding liabilities, they need to set aside some money to be accounting for that future liability. So getting your sales tax figured out, getting everything in a clean place is very important when it comes to mergers and acquisitions.
Yeah. So bottom line is, as you continue to grow, you need to make sure you're compliant. It's extremely important, both from a risk perspective, and making sure that you're compliant with the jurisdictional obligations you have, so that you're not hit with costly audits and penalties. And also, it impacts customer satisfaction. So some of the risks that, if you're again, as an organization, you're going to run into these challenges. You need to solve for these challenges. And so how you choose to do that could impact your success. Right. So if you choose to adopt this manual or reactive approach, it's really going to slow down your growth or prohibit you from realizing your potential. Right. We've seen organizations, I've had conversations with organizations who have said that, they don't want to sell into states like Colorado or Arizona or Louisiana because of the complexity associated with tax. And of course, these are the tax folks that I speak with, and they may not have overall control of that, but they know that if they get into these specific jurisdictions, it's going to add stress to their responsibilities. So you don't want the fear of tax compliance to be an inhibitor to your growth. And there's a couple of different areas that we typically see organizations need to account for. And again, if you're doing this manually, it's going to add stress and potentially introduce risk. So from a determination standpoint, it's really important that you charge the right amount of tax on your transactions. And many of you may sell via Shopify or sell on marketplaces like Amazon. In that case, oftentimes those platforms have built-in tax determination, which is good because it takes a headache off of you. All right, so all you're really responsible for is making sure that you've classified the different products that you sell correctly, and then that platform takes care of the tax determination. But many of you may have homegrown e-commerce solutions or different channels or point of sale systems in which you interact with your clients on, and you've got to make sure that as you're conducting business with your clients, the sales tax is calculated correctly on these channels. And it becomes difficult to keep up with from a jurisdictional standpoint because the rates continue to change, and not just the rates, but the taxability of whatever it is that you're selling could potentially change in different jurisdictions. And so, for example, in Massachusetts, we have a clothing exemption that clothing is exempt up to $175. After that $175, you will pay tax on the excess of that. So if I buy something for $175 or $176, I'm going to have to pay, that's 6% tax on the dollar,
yeah.
Right? But there's the clothing exemptions in New York work differently, right? As soon as you cross that threshold, now the entire amount of that transaction is taxable, and so it's keeping up.
And I think New York is $110 instead of $175. So all of these little details.
Yep. So it's really challenging to keep up with some of those details. And so again, if you're leveraging a platform where you don't have tax determination built in, you've got to figure out those rules, and trying to keep it and maintain it manually is really difficult. The other piece, and we didn't talk about this from a growth perspective, but it may be something that you're experiencing. Many of you may be selling direct to consumer, in which case, the consumer for the most part is going to be a taxable individual. And so you really only have to worry about the product or service you're selling to them and the jurisdiction. So it's only two factors. If you start selling to businesses, right? If you start to grow by maybe you're selling to businesses and they're reselling on your behalf, or you're offering additional services that business clients may get benefit out of. Businesses may have customer exemptions. They may be exempt from paying sales tax based on who they are or how they're actually going to be using what it is they buy from you. And so you may need to consider, how do you manage the customer exemptions and the customer taxability? And again, doing that manually becomes tricky, because does their exemption that they have, does it apply across the board, or is it only for a specific jurisdiction or for a specific product or service? So that's difficult to do. And you need to make sure that you get this right, because if you don't get it right, again, you're negatively impacting your customer experience. Right? And that's critical for you as retailers, is that you want to make sure that you're providing the best customer experience possible. If you're overcharging tax based on, if you're charging the wrong tax, and you're overcharging tax based on the product should be exempt, or the rate that you have is inclusive of something where the client isn't established, you're going to negatively impact your client experience, and they're going to potentially look to do business with somebody else. You've got to make sure that tax doesn't become a reason for your customers to not do business with you.
And some customers are actually really picky. They actually read through the lines that compose your sales tax rate. We've had clients that have gotten complaints from customers saying, why did you charge me in like this city's rate when I'm not living in that city? They read through all the line items. So, and sometimes we have to explain to them, like if it's an origin source state, that it's not by where you live, it's by where we're shipping items out of. So all of these details, you just need to make sure it's correct. Otherwise, you have some really picky customers that will send you those complaints.
And you, to your point, Kasheen, you've got to look at all those details. And if you're trying to maintain that all manually, you're going to make mistakes. It's just not possible. Two other pieces just on the tax determination. One is the adjustments or the additional components of the sale. You know, we work with many organizations who will either, from a retail perspective, you may have a retailer's coupon or discount that you'll offer, or promotion that you could potentially offer to your clients. How does that affect the taxable base? And in most states, you'll be able to take that the discount amount off of the taxable base. But in some cases, manufacturers' coupons. So if you're selling something that you are essentially reselling, and the manufacturer has provided a coupon, sometimes that discount is passed on to the consumer. They don't have to pay the sales amount, but they'll still have to pay tax on the total amount of what the pre-discount price would be. And again, this varies by jurisdiction. So if and the other one that we see often is rewards points, right? If you are offering some sort of rewards program to your clients and giving them a discount based off of how often they conduct business with you, that could potentially impact the taxable base as well. So it's making sure that you've accounted for things like that, as well as the cost of the tax on shipping and handling, right? If that's a cost that you're passing on to your client, how is that taxed? And again, that's taxed differently in pretty much every jurisdiction. You could have a different way in which that's taxed. And then depending on what it is you're doing, if you're just shipping via common carrier, or if you're actually providing a service where you're wrapping that a certain way, it could be considered handling. So there's a ton of different nuances that you also have to account for from a delivery perspective.
Yeah, and the last point is sales tax holidays. We just, I think most of the sales tax holidays are already passed by now, because most of it is like back to school and some disaster relief. But I want to say there's more than half of the states that have sales tax holidays where certain items are exempt from sales tax during a certain amount of periods. So some of our clients will have to go in their systems right before midnight of that state and turn off the tax settings for certain products just so it qualifies the exempt status. And then they have to remember to turn it back on after the sales tax holiday ends, and to make sure they're charging sales tax on those products again. So it's a very complicated process that could require lots of manpower at your company.
We've definitely seen some headlines in years past where even large retail organizations have made mistakes on sales tax holidays, and it's potentially opened them up to lawsuits brought on by consumers. So it's a real challenge. So you've determined tax correctly. So if you can do all that stuff and you can figure out a way to automate it, now you still have to figure out how to file the taxes that you collect, and making sure that you reconcile, the actual tax that is you think you owe with what you've collected. That's a big challenge that organizations have. Depending on where it is, one of the primary drivers that we see in our customers, right, and introduced mostly by Wayfair. Hey, now I've got obligation in these jurisdictions. I had to file taxes in one state. Now I have to file taxes in 19 states. And I got to do that on a monthly basis, or a monthly and quarterly basis with some of these. So it's the volume of additional returns that need to be filed. And then it's the forms change. There could be a way in which the state or jurisdiction wants you to report a specific item. Maybe they They want to see all of your exempt sales, or they want to see your total sales, or they want to see it by location, by outlet, so that the forms continue to change. So you have to stay on top, not just of
Are you thinking about Colorado again?
I have nightmares about Colorado. No, I think Colorado.
I think we all do.
Colorado is one of those tricky ones where each one of the the local level jurisdictions, many of them have their own processes. Many of the states often have local levels of tax, but they're all maintained at the state level. Colorado allows the jurisdictions to self-administer their sales tax programs. And so that introduces a lot of challenges because it's not consistent across jurisdictions. So yeah, tax filing, and Kashia, I know you have some thoughts on tax filing challenges and headaches that clients have.
Yeah, I think when it comes to like the practical point as a business owner, like when it comes to sales tax, is a few touch point, right? Like you have to register in the states yourself, and then it comes filings. And when it's filings, certain states you can easily manage to file manually. Like Massachusetts, it's 6.25%. It's a flat rate on taxable items. If all your sale is taxable, and if, let's say, you are in California before and now you need to file in Massachusetts, it's really easy to file that Massachusetts return, because you just take your sales minus any exempt sales and then times that by 6.25, and that's it. But if you're selling to Colorado, and maybe we use another example, maybe we do Missouri. Missouri is a bad example because Missouri has over like 2,300 local jurisdiction rates. So if you have to source every single sale you make from California to Missouri to say which district, which county, which city is the sale going into, and then associate that address with the exact rate, and you have to do that all your transactions into Missouri. As a business owner, I would just say I'm going to stop selling into Missouri, going back to Tim's point. And I actually got an email yesterday from a potential client saying they're just going to turn off their tax settings into North Carolina because they don't want to sell into North Carolina, to have that nexus, to have that potential responsibility of filing a sales tax return manually. But the good news is, if you use a software, the software help you organize the data into the way that the states want it to be reported, and it also will pull in the tax rate accordingly. So all of your worries, most of your worries will go away if you use a fighting tool to help you organize the data. And the fighting tool keeps up with the forms change, the rate change as well. So you don't have to having to keep checking the state's website for those updates.
All right, well, let's stop scaring people for a minute. Let's talk about some solutions and how you go about figuring out what solution is right for you as an organization. So,
yeah,
Kashina, I'm going to let you drive for a little while.
Okay, sounds good. So we want to talk about how you select a vendor, because there's so many options to consider. There's Sovos is for sure one of them. There's also TaxJar, Taxify. I think there's TaxCloud, Avalara, Vertex. Like we can probably name like over 10 of them, and that's not even all the vendors. So what do you do to select a good fit for your business? We want to kind of remind you, before you select a fighting tool, you ask yourself, are all of my sales through a marketplace, or are all of my sales exempt? Because if you say yes to either one of those questions, you might not need a fighting tool, because the logic of a sales tax return is it's a tax on taxable sales, or sales that you are responsible for. If you sell through a marketplace like Amazon, if all of your sales are going through Amazon, then Amazon is taking care of that liability for you. It collects, it files, and if you need to file a return as well to let the states know how much you've made through Amazon, which like California and Washington, they are requiring sellers to still file an informational return, you can just file that yourself. You don't need to break down your sales into each local jurisdiction. So you can put everything as gross sale and everything as marketplace sale exemption, however the state's form call it on their forms. And then it's a very easy form to file. If all of your sales are exempt, for example, if you sell if you sell kids clothes that are all under $175 into Massachusetts, then all of your sales are exempt. But if you are physically located in Massachusetts, they would still want you to file a sales tax return. But then you can take everything you sell as the gross number and as well as the exemption number, and you still arrive at a $0 liability at the end of the return. So then you might not want to invest in a filing tool. But if you sell on multiple channels, if you sell products that are taxable here but are not taxable anywhere else, if you have like any other complications, I would strongly recommend getting a filing tool for your business. But before going to Google all the different vendors, like before Googling how much does Sovos charge or how much does Avalara charge, I would look into your own business first and gather and define requirements. What does your business need? Do you need local jurisdiction filing? For example, like Tim talked about with Colorado, with certain home ruled cities, TaxJar does not support local jurisdiction separate filings from the states. Do you have back filings that you need to do? Certain software doesn't support that as well. So before you look outward, I want you to look inward at your company and see what the needs are. Where do you need to file? What your CRM system is, what your financial systems are recorded in. Do they connect? Like what kind of connection and integration you need with the software? And after you gather and define requirements, you determine what type of solution you need. And then you can research potential vendors. And then you ask them to give you a demo, and then you can review and make a selection afterwards. Most of these softwares will offer a demo for free where you can come with your questions and tell them what your requirements are. So I can't emphasize more about looking in your company to see what your needs are before doing the vendor search on Google.
I think that makes sense. And I've been on the other side of this a fair amount, where we're, looking to partner with prospective organizations. And we when we're talking about our solution, we're going to ask all these questions anyways, right? We want to best understand, your requirements, all the different integration points. And so as an organization, you can come prepared for those meetings. It helps make sure that if you're going to be spending time in a sales process trying to figure out the right fit, you can make the use of that time as efficient as possible, because oftentimes what we see, organizations are really interested in getting to a demo and a price, right? But from a software provider perspective, in order for us to figure out, okay, what's the demo that we need to show you to highlight the things that you're going to get out of it, and what the price, we need to understand that the things up top that Kashi mentioned. So that's going to help you make the process, run smoothly, because sometimes we'll get pushback from clients and they'll say, just give me a demo and a price, and we don't know what the solution is. And so the more we can partner on those efforts, the better the experience is going to be for you.
Yeah, it's a lot of inefficiency and going back and forth if you don't know what you want before you start talking to a vendor.
Yep. Okay.
Tim, I think this is a checklist that Sovos has, right?
So right, looking for, as you're looking for technology, understanding, kind of to Kashin's point around the requirements, right? Where is it that not just now, but also in the future, you're going to potentially want to do business, and how scalable is that solution? Are there limitations, geographically? Are there limitations with the type of industries that the solution supports, right? I think as you make an investment in a solution like this, you want to make sure that you're not going to have to go through 2-3 years later and say, okay, we've outgrown this solution. what do we do now? Right? When you want to make a partnership for a solution like this, you want to be able to partner with somebody who can support you as your business continues to grow. The other thing related to availability is, especially for conducting sales via e-commerce, people could be interacting with your storefront all hours of the night or day, night, whenever it is. There's not, it's not like a 9 to 5 on Monday through Friday when people are walking into your store. It could be whenever they feel the need to engage and to purchase from you. And so you need to make sure that if there's a sales tax solution that's potentially doing the determination, right? If you're not using a Shopify or an Amazon, if you've got your own website and you need to interface that with a solution to do the determination, that system's always available. The last thing that you want is for someone to not be able to complete an order with you because they can't get a response back from the sales tax calculation engine. Right? That's the last thing any of us in the industry would want either, is to have a sale be held up based on our availability being down. And then figuring out, okay, what does this look like in terms of how do we get started, right? So that's the other piece of that software evaluation that I might add is, it's really hard to just click a button and have everything be set up automatically. There is going to be, some steps that will need to be taken between you and the technology provider to make sure that your business, your transactions are all flowing through, getting tax determined correctly and being placed on the appropriate returns correctly. There's a little bit of configuration that's going to be needed to be required. So how does that align with your expectations? Making sure that you're asking the questions, okay, when we sign here, what is it that we get? What are the responsibilities that you as an organization need to make sure you account for? What is it that the technology provider is going to be able to assist with as well? Because that's the other piece. You want to make sure that when you invest in a solution, when you turn that solution on, it's doing what it is you need it to do. It's not, okay, now we've turned the solution on and you got to jump through these hoops in order to get it to work in this state or that state or with this product. So it's making sure that when you're ready to turn it on and have it work for you, it's working based on those requirements that have been defined.
Yeah, I agree with that 100%. And then the next couple slides, we want to talk about Sovos. And I want to give some quick examples because we have been transitioning a lot of our clients from other solutions to Sovos because we think Sovos is a better product than a lot of the other alternatives. These are the questions a lot of people will ask. How quickly does the support team respond to a question? From my experience, we are in constant communication with our Sovos team because before we use Sovos, most of our clients are on Taxify, and Taxify is a great product too because they have a really good support team. They have a phone number that you can call during business hours and you can get to talk to a human being within 5 minutes usually. And you don't really get that level of service for a lot of other vendors. Taxify is part of Sovos, and Sovos has definitely inherited this good customer service feature where you can talk about your issues with someone and they will look into your issues right away and get you a response in a very timely manner. We also have a weekly call with our Sovos implementation specialist to bring up any issues we've seen. So that's been very helpful. Are you getting a fair price? Lots of people question about that, and I can confidently say that Sovos is giving you the best price for the value they provide. Is the software hands off? You can definitely let Sovos take care of things for you, or you can take care of things yourself. They give you the flexibility of how you manage your sales tax compliance. How long until we see a benefit? I think you'll see a benefit right away, just from taking the load off your shoulder so you don't have to be buried in the data and having to sort through every transaction yourself and figuring out the forms and where numbers go on each forms. With the recent change that Tim mentioned in Colorado as well in Illinois, the forms have changed a lot for those two states, and Sovos was able to implement those changes fairly quickly, so there was no interruption to the fighting requirements or meeting the deadlines. So we've been very happy with Sovos. And I think from an entrepreneur's perspective, when you think about a solution, you want to get a good solution for a good price. And Sovos is very accurate. It's very user-friendly. They have the support, unlike some other solutions, and it's at a very reasonable price. So we're transitioning, I want to say, before, like over 50% of our clients are on other type of solutions, but now I want to say over 80% of our clients are in Sovos. And for any new clients we take on, like especially for e-commerce clients, we're just gonna straight sign them up with a Sovos account and we'll manage their filings for them instead of recommending them to different solutions, because we've tried out a lot of solutions and we've seen most value with Sovos.
We appreciate that, Kasheen. I think the fair price, I think the other piece there to note is just transparency, understanding, and that's, again, one of the things that we strive to do with our clients, to make sure we're transparent with, nobody wants to get a bill for something they weren't expecting, right? So understanding if you have this volume of returns, what your anticipated price is going to be. If it spikes, what does that do when you jump into the next tier? So I think that's another thing just to make you aware of as you're evaluating providers, right? And the goal here is to grow your business. Grow your business means more volume, means potentially more returns. So what is that going to do, especially if you're signing up for, a 3 or a 5 year contract? Making sure you're aware of what your growth and the impact of that is going to be on your price. But yes, it's where the transparency comes in, right? So just making sure some additional things to look out for, knowing that there's a lot of, as Kasheen was rattling off, I think 8-10 different providers, right? This is a fairly mature space, right? There's a number of us have been providing solutions for a while, so you should be able to find appropriate reviews, and also understand the length of the time that different providers have been working with their customers, because this is a space that's been it's been around for a while, and providers have been around for a while, and there should be a track record there that you can go off of.
Yeah, I just want to add that if you're just starting your business and you don't have much experience in integrating an app to your existing website to help you calculate tax or file returns, if you feel like you need a lot of help and support through understanding the process of how to use the software, I really think, from just my personal experience, that Sovos and Taxify are the best at providing customer support. If you go with another vendor, they might promise a lot of help, but from my experience, it takes a lot of effort on your part to figure out what the process should be, versus you can talk to someone, they can walk you through, they can tell you exactly where to go and give you a lot of help at the beginning. So you don't have to stress about, did I set up the software correctly? Is it actually going to file for me? What parts am I missing? So as an entrepreneur, if you are running, or like if you're a solopreneur, if you're running the business yourself, you don't want to go back and forth on an app that should be making your life easier. So I'm not saying you have to go with Sovos. I'm just saying if this is a concern of yours, Sovos does provide lots of hands-on help.
All right, and it's in our best interest to make sure that you're successful. And as she mentioned, this should be this isn't your core business, right? Your core business is growing your business, right? You should be able to partner with someone who is able to make sure your tax is being calculated correctly, file your returns accurately, and provide you with that level of transparency, but not force you to get into the details and look at the reconciliation of, okay, here's what we collected, here's what they filed, is it right? You want the provider to come back to you and say, here's what you collected, here's what we filed, everything matches up, right? And I think that makes sales tax, and I think as we get into some of the additional things to look for from a provider, that really makes this more of a service that you receive as opposed to another software that you have to manage on top of all the things that you're doing already, right? So whether it's counting upon a provider to have the level of regulatory expertise to make sure that all the rates and rules are calculated correctly and all the forms are updated, making sure that that system is responsive, both from a technical perspective as well as a support perspective. And then the other thing that happens sometimes is jurisdictions will send notices back to taxpayers and say, hey, we're changing X, Y, or Z, or hey, on this last return that you filed, we noticed something was a little bit off. Could you change it? That's another the notice handling aspect is another piece that could potentially add manual effort to your ongoing sales tax compliance, and that's another piece that providers like Sovos can take off of your hands.
Definitely. So we just want to re-emphasize that expertise, responsiveness, and proactiveness when you select a vendor to make sure you cover all those and find someone that you want to be a partner with. Or if you don't want to manage sales tax, you can always have us do your sales tax, and we'll use Sovos to help you manage sales tax as well.
Yep. So
the third point we want to touch on is, Tim, do you have anything to add for the? Okay, great.
No, I think we're good. I was going to give you a plug for there's software. Then there's also the firms that will use the software. So it's as you're looking at how you can help ease this burden. A lot of the questions that Kasheen was talking about from vendor selection are good to leverage as you look for partners to help you with this as well. So.
Yeah, as a company, like we want our clients to have the best vendor as well, like because we've actually been through this process. We've vetted lots of different solutions. So depending on what your business needs is, you need to determine that for yourself. So the third point we want to talk about is the benefits of sales tax automation. And it kind of just summarizes what Tim and I have been discussing. So the first is reduce or eliminate manual processes, where we talked about how there's different product taxability, rate changes, reconciliation filing, all the different forms, updates, and ensure accuracy. Because at the end of the day, you don't want to be audited. The states will come after you and will look at your filings, and they will see if things were not accurate, either by rate or you actually have products that are not exempt, but you claimed an exemption. So you need to make sure whoever you're partnering with can make sure your filings are accurate. So you don't have this risk of ever being audited by the states. And I want to say that Sovos and Avalara and Tax Cloud, I think, are the 3 certified services providers for Streamlined sales tax. So they go through audits and processes with the state government every year or every 2 years to make sure their database is up to date. So usually we don't see many problems with rates that Sovos has to when we file our clients' returns.
And I think just to kind of wrap up the process, this diagram that we have here is one that I use to explain, the space that Sovos is in, as we're bringing on new hires or engaging in conversations with prospective clients. You're running a business, you have systems that help operate your business. You have to be compliant with tax where it is you operate. And you have to make sure you calculate tax correctly based on what you're buying, what you're selling, who it is you're selling to, where it is you're selling it, what it is that you are selling, right? And then after you calculate tax, you've got to aggregate all that information and make sure that it matches up with what you've actually collected. Then you've got to file. And then, as Kasheen mentioned, you've got to support any audit. So this is something that everybody has to do. as they're operating a business. And by leveraging software, you're able to automate all those pieces as opposed to throwing time and effort at it. And some of the businesses we have listed here have kind of gone through this. Boscov's is a department store chain. Actually, it's where I bought my first suit that I went to a wedding with my now wife, I don't know, 15 years ago, and I was down in New Jersey, and I'd never heard of Boscov's, but I bought a suit there to go to a wedding with her. So it always sticks in my mind as an interesting case study. But they experienced, they have physical locations throughout the Mid-Atlantic, but then because of Wayfair, they're doing a lot of e-commerce, and their filings jumped from 19 up to 30 states. And they were doing it manually, and they called us and they said, we can't do this manual anymore. You have to help us. And so they leveraged Sovos to automate their sales and use tax filing as well as their tax determination. But they needed to offload the manual effort with now filing in 30 states. And the Go Keyless and Derived case studies are similar in that Go Keyless was just registered in Ohio, and because of Wayfair and remote sales, they had obligation in 20 plus states, and it's not something that as a business they were staffed for. And Wayfair causing against the balance of growing your business to expand into new geographies versus staffing your business to support now the compliance need associated with that growth. Right? So if there's a way to eliminate that manual effort by leveraging software and outsourcing software services, that's going to help your bottom line as an organization.
Yeah, I definitely see that trend as well. Most of our clients, we didn't really have a sales tax team 3 years ago, and now we have over 50 clients because of this growth, because of this requirements. And some of our clients came with us. They want to be they want to be prepared, so they want to get registered in all the states that they have nexus. Some clients come to us because they were already audited by states like California, and they're scared that they might have more liabilities in other states, and that's why they get registered. So whatever your story is, this requirement for sales tax for e-commerce business is not going to go away anytime soon. And to get everything filed correctly across all the jurisdictions is so hard to do if you don't have a tool to help you. So, and that's why we're here to talk to you today, is letting you know that from our experience, yes, you can do it manually, but it's so much better if you have a software to help you in this process.
So, Kasheen, what do they do? Right. Hopefully, out of this, the last 45 minutes or so, we've helped explain some of the challenges that they could experience from a growth perspective related to sales tax. You've outlined some criteria. We've talked about the benefits. What do they go do now?
They need to look inward first to identify what their requirements are and what their needs are. Where do you have a sales tax obligation right now? What do you need help with? What are you looking for in a vendor? And then you can research potential solutions, ask for demos, and then just allocate a budget to get on with your sales tax filing. Because as I said, it's not going away. You have to take care of this. And the sooner you act, the better. So if you get audited by a state, the look back period won't be as long as it could be if you just sit on it and hoping that it'll go away.
From that budget perspective, I know we work with prospective clients on helping to build out an ROI analysis, right? If that's something that is needed, because sometimes you could look at it's a purchase, right? You're signing a contract with their provider to perform a service for you, and you look at that potential cost and you project it out over the course of 3 years, wow, that's significant of investment to solve this problem. But I think it's worth weighing it against the time and the money and the resources and the potential compliance risk associated with not having an automated solution. And so I think that's an important piece too, that I know there's been studies out there, and again at Sovos we're always happy to help create an ROI analysis with you as you go through this analysis.
And depending on where you need to file sales tax, if you use Sovos, as I mentioned before, Sovos is a certified service provider with like 24 states. If you need to file in one of those 24 states, you might be able to use Sovos for free. So feel free to contact me and Tim afterwards if you have questions about that as well. We just don't have enough time to go into all the details, but we have answers you need. Or even if you just want to let us know what your business model is to help you like select a vendor, we're happy to help chat through your situation as well.
Yeah, there's this industry, like I mentioned it before, that sales tax is kind of a mature industry, and that people have been in the technology space, and we've been in business doing this for over 40 years, but the pace of change from a regulatory perspective continues to accelerate, and the different programs. And Kasheen was just mentioning the Streamlined Sales Tax Initiative, and there's a Model 1 program that allows remote sellers to basically have their software license costs reimbursed for using a certified service provider. So there's a lot of different programs out there. There's a lot of information out there. We're happy to help put you in touch with the right folks. There's a lot of information on both of our websites about industry news and trends. So if you're just looking to get educated, I'd advise you to leverage some of this information here on our websites to continue to just get educated on the space, because it does continue to evolve. And that's part of why we're here in business, is to make sure that our clients are kept up to date. So if there, Kashina, any parting words before we turn it back over to Megan?
I think just sales tax is kind of a headache, but you can manage it with a tool, and it'll make your life so much easier. It makes our lives as accountants very easy when we have a tool to help us organize data as well. And it's not so scary. It's just part of the cost of doing business. And if you start it sooner than later, it's not a cost that will come out of your pocket. You're having your customers pay. And most people are like okay with paying sales tax in a different state, because everybody's asking their customers to do that. So don't worry about having to charge your customer tax in a new state. Don't let that stop you from being compliant, because you need to follow the rules. Otherwise, you'll need to pay money out of your pocket. So take care of sales tax, use a tool, and reach out to experts if you have any questions.
Yeah, that's a good point. I think a few years ago there was a stigma, of customers maybe looking to buy from sellers if there was no sales tax. But now, to your point, everybody's going to pay sales tax. Although sometimes I do still get in the car and drive 20 miles north to New Hampshire, where there is no sales tax, to buy things in person. And I think technically I'm supposed to report that on my income tax statements, but don't tell anyone. But yes, nobody is making money by being, this is not, you can't continue to throw time and resources at this to do it better. You don't win awards for being the most compliant. You just are compliant, and you don't get hit with penalties based off of audit. So there are solutions out there to help. Leverage solutions. We're happy to help have a conversation about anything. So really appreciate the time. Kashina, it was wonderful presenting with you today. And Megan, we'll turn it back over to you.
Amazing. Thank you so much, Tim and Kasheen. What a wealth of knowledge the two of you are. That was a lot of information. This session was recorded, so we'll be sharing it so you guys can watch, rewatch, take notes. And to our audience, thank you for tuning in. Just going to throw up our upcoming events. We have 2 more Power Hours in our Build Your Business Power Hour series. This week, tomorrow at 1 p.m., we'll be talking about raising capital with Pero. And then on Thursday at 1 p.m., we'll be taking a look into consumer shopping habits for this holiday season with Klarna. That's going to be an amazing conversation. On Thursday, November 18th, we have our Discovery Show at Home, where we're bringing together the best in beauty, wellness, food, and beverage for our conversations on innovations, what's next, ways to propel your business forward. And then our final summit of 2021 will be our D2C Innovators Summit on December 9th. So thank you guys so much for joining us, and we will see you next time.
Thank you. Have a good day.
Bye, guys. Take care.